Welcome to NR Market Review, Natural Rubber Market Review. Just have a quick review of the developments in the natural rubber markets world over during last week. Last week, the major importance observation was the total absence of China from the physical markets, and during whole week, the Shanghai trading on Shanghai futures market was not there. So that was major important observation regarding previous week. Shanghai market is very important in influencing the prices both in the futures and physical world over. Shanghai market was closed totally last week, and China physical market is also very important because China is accounting 43% of the world demand for natural rubber. So China's absence was the major important observation regarding last week. At the same time, when we look into the supply side, supply was low due to what is called a seasonal shortage of supply due to wintering of rubber trees. After the leaf falling season, it is a season of a refoliation of or young leaves coming. So during that time, farmers usually give tapping layoff, and because of that, supply entered into a low phase season world over. And another major development which had an indirect influence on natural rubber markets was the abnormal increase. I would say abnormal increase in the crude oil markets. Brent crude oil reached around $95 per barrel, and according to players in the markets, it can reach around $100 per barrel. So that is when when crude oil market increases, normally the investors in speculative investors will speculate on possible substitution from crude oil derived synthetic rubber to natural rubber. They speculate in that way, even though the actual extent of substitution is limited. Speculators will work on that. Not only that, crude oil price has negative implication also because crude oil, tire industry as well as other end products, rubber end products heavily depends on not only crude oil-based raw material. So this is also important. In that way, crude oil has both negative and positive implications on natural rubber demand as well as market sentiment. Then another major factor which dominated market sentiment during last week was the concern on imminent rate hike, means an interest rate hike by central banks, especially US Federal Reserve and the central banks in advanced countries, European Union as well as UK. So players in the market are expecting some kind of a higher interest rates. In higher interest rate means that borrowing cost is going to be higher. In borrowing cost is higher means speculative investments, the return from speculative investment will be less attractive once borrowing cost is higher. Another major development was the dollar. Dollar staying strong is not good for commodities, and natural rubber is no exception. Dollar stayed strong during last week as we expected. Then another major observation, major important development that dominated market sentiment during last week, not only rubber, it also dominated the sentiment. The equity market was the geopolitical tension centered on the US-Russia relationship or the friction between US and Russia over Ukraine, and this geopolitical tension stayed elevated during last week. And whenever there is some kind of geopolitical tension, so what speculative investors will be, they would prefer to stay away from speculative investment during uncertainties. So this was another important factor. And last week we predicted that the physical markets, physical prices of natural rubber will be marginally higher because physical market will be getting strong support from seasonal low supply of natural rubber. But we expected prices not to gain substantially because of the various negative sentiments, especially the geopolitical tension centered over US-Ukraine or the US-Russia issue over Ukraine. So that means that even if prices can go, physical market conditions are favorable, gains would be limited because of the geopolitical tension and other factors impacting on the market sentiment. So we expect, that was our expectation. And also we expected that latex price would be performing better relative to TSR, because latex price is performing better because of related to TSR. We expected because during the low supply season, latex processing industry, latex processes every year during this particular season, they offer a premium price to ensure that raw material or fresh latex is easily available. That means that if they offer a premium price for fresh latex, farmers will be encouraged to sell the produce in the form of fresh latex rather than selling the produce in the form of coupling, which is easier for them. So these were the development last week, and our expectation was marginal increase in physical markets during the last week. Let us see how the market performed during last week. When we look into the futures market, as I mentioned before, Shanghai market was totally closed. There was no trading on the Shanghai Futures Exchange, so there is no Shanghai market. There was no Shanghai market last week. And Psycho Singapore Exchange TSR20 averaged 0.4% higher during last week compared to a week before. It's marginally higher as we rightly expected. And at Osaka market, Osaka Futures Exchange RSS3 averaged 2.4% higher compared to a week before. When we go into the physical markets, around 70% of the global production is processed and traded in the form of TSR, and TSR20 is the most prominent or most popular traded form of natural rubber in the world markets. We have two important markets for TSR. One is TSR Bangkok, which is traded in the form of STR20. STR20 last week averaged 0.5% higher during last week compared to a week before, means marginally higher compared to a week before, rightly in the way we expected. And when we look into SMR20 Malaysia, Standard Malaysian Rubber, which is another important market for SMR, for TSR, averaged 0.2% higher last week compared to a week before. So that there is also marginal increase. When we look into RSS, there are two important markets. One is RSS3 Bangkok FOB. Bangkok FOB RSS averaged 1.9% higher during last week compared to a week before. And another important market for RSS is RSS4 India or Kottayam markets in India, averaged 2.5% higher during last week compared to a week before. And latex, we specifically mentioned last week that latex price will be rolling relatively better than TSR. So when we look into Bangkok market STR20, that means a TSR, average only 0.5% higher compared to a previous week. But in the case of latex Bangkok, latex market average 4.8% higher during last week compared to a week before. That means latex price significantly performed significantly higher compared to STR20 in the same market. We rightly expected that in the last week. And in Kuala Lumpur market SMR20 average only 0.2% higher. SMR20 average 0.2%, means a standard SMR20 TSR grade in Kuala Lumpur market. But the same market, means Kuala Lumpur itself, latex price averaged 2.2% higher compared last week compared to a week before. That means we made two important predictions. Marginal increase in rubber price during last week, it happened in that way. Also, we predicted latex performing relatively better compared to TSR20. That also happened exactly what we mentioned. Looking ahead, so tomorrow the Shanghai market is going to open after staying closed for around from 31st of, or maybe after 28th of January, closing for a remaining close for a long period, and tomorrow Shanghai market is going to be open. So two investors will be looking into Shanghai market in two ways. One, seasonal short supply. Physical market conditions are favorable for our price to stay high. So physical market condition is favorable. At the same time, there are a number of factors which are potentially weighing down sentiments in the market. Major one is a geopolitical tension, as I mentioned before. Then dollar staying elevated, staying strong, and at the same time we have issues like what is called other issues. For example, interest rate going up, borrowing costs going up. So these negative factors will be there. So investors in speculative markets, they have two. One, physical market conditions favorable, at the same time they have unfavorable condition. So how Shanghai market is going to perform when it is opening tomorrow is a little bit uncertainty. We have to wait and see. But we have two important observations. One, physical market condition is favorable, and the physical market is going to get strong support from seasonal short supply. Seasonal short supply during the coming week or this week will be, the shortage in supply will be more severe compared to the 1 week before. Means more farmers have stopped tapping, and we have the supply is getting, the shortage of supply is going to be a little bit more reflected in the market in the coming week. So this is a positive factor in the coming week. But at the same time, the market sentiment in the market will be weighed down by various, I would like to say, non-rubber factors. Means several factors which are not directly related to rubber. So various external factors are likely to weigh down market sentiment, especially the sentiment in the futures markets, and that may be having some implications on the physical market, implications on putting it the coming week. We can expect physical market gaining strength, further strength next week, but the gains will be limited because of the negative sentiments from non-rubber factors or factors which are external to the rubber sector. That's all for the outlook for next week. Thank you very much. We will see you again next week at the same time. Thank you.